Welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So there's no sugarcoating it, guys. We were absolutely blasted this past Friday. If you guys saw my Thursday video, I warned everyone and I told you the numbers to look out for. We're supposed to come in at about, the CPI data was supposed to come in at about 8.3%, and if it was lower than that, we would have a nice rally. If it was above that, we're going to see the market tank, and sure enough, CPI came out at 8.6. As we can see, as a result, S&P finished negative almost 3%. The Dow having one of its worst days in recent history. NASDAQ having another terrible day, finishing negative 3.52%. And also the Russell finishing negative 2.73%. Energy coming down a bit as well. So the biggest driver right now is, again, that's going to be happening this week, is going to be the Fed meeting that's going to happen on Wednesday. So the big issue right now is currently the Fed is on course. Prior to the data of the CPI, he said that all the Feds are saying they're going to raise 50 basis points each month. But the thing is, the Fed is widely expected, this headline right here, the Fed is widely expected to face the Fed funds rate by half a point, Wednesday and again on Monday. But Friday's very hot inflation report sparked expectations policymakers could hike faster and higher. So the big thing that could happen in the market, and again, the meeting is going to be at 11:30 a.m. Pacific Standard Time on Wednesday. If Jerome Powell comes out and says, given the current data, we are going to raise the interest rates for the next 3 meetings by 1%, Tank City 100%, the market tanks. Currently, it's being priced in a way, the reason the market's selling off is because it's being priced in at about 75 basis points. So basically, the market's trying to do the work for the Fed, saying, okay, we think you're going to do 75 basis point at this meeting. However, if the Fed comes out and says we're still going to do 50 basis points for the next 3 months, expect a rally. That's what will probably happen. But again, if he says 75 basis points, not much will happen. The market will go down a little bit. It won't be a huge deal. However, if he says he's going to hike by 1 basis point on Wednesday, bloodbath, absolute bloodbath. That would cause the market to completely tank once again. So that's something to be on the lookout for. Because the biggest issue with the constant interest rates going up higher and higher is that the earnings are basically under threat. The higher the basis points that the interest rates go up, the more the bigger threat it's going to be on earnings. In the stock market, as much as it might seem like a rigged casino, it's all based on earnings, economic data, like geopolitical issues. Those are small things, but at the end of the day, everything's based on earnings. Stocks go up based on earnings. Stocks go down based on earnings. So the biggest driver, as if you're not aware at this point, is basically inflation. And Joe Biden, once again, on the news. I don't know about you guys, but everyone that I know is fed up with this president coming out on the news. And who does he blame? Have a look.
Meantime, Wall Street didn't like the new inflation data at all. The Dow dropped nearly 900 points today. It's been down for 10 of the past 11 weeks. That hasn't happened since the Great Depression. Today, President Biden spoke at the Port of Los Angeles, and again, he blamed the rising prices on Russia's invasion of Ukraine.
I understand inflation is a real challenge to American families. Today's inflation report confirm what Americans already know. Putin's price hike is hitting America hard.
The president vowing to lower prices for Americans. In a moment, CNBC's Kayla Tausche on how the White House is responding. First, CNBC's Closing Bell anchor Sarah Eisen. Sarah, one of the economists, or at least some of them, expect inflation to cool in the second half of the year. Is that realistic now?
Well, Shep, one takeaway from today, nobody can forecast peak inflation. Optimism had been building in recent weeks on Wall Street that prices had seen their high points, but this shockingly strong and broad read today proved them to be wrong. Despite the troubling rise, economists do say it should start to come down in the coming months. Why? Well, we have seen signs that demand for goods, electronics, apparel, used cars is slowing. We heard that this week from Target, for instance. That should pressure prices in those areas. There's also some early evidence in retail and semiconductor industries that supply chains have started to improve. Chinese factories and ports are open for the moment after being shut down for COVID. And while the American consumer has held up relatively well, the Federal Reserve is slamming the brakes on the economy, and we're likely to see the impact of that in the coming months.
Yeah, guys, that's what's basically happening in the economy right now. Inflation, the biggest driver. The biggest fear right now is that Fed meeting that's coming up on Wednesday once again. And again, if he goes with that 1 basis point, forget about it. You're better off like not looking at your portfolio for the next few months if that happens. But yeah, guys, thanks again for watching the video, and I'll see you guys again tomorrow. Take care. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.